Will everyone prepare for the U.S. dollar to go down even more? Yes, the Federal Reserve is meeting right now at their cushy resort in Jackson Hole, Wyoming. What are they talking about? Of course, they're talking about interest rates. They're talking about inflation. They're talking about the economy. They're talking about Bidenomics. They're talking about the election. So you are about to see some major shifts and some major verbiage come out of the Federal Reserve over the next few weeks at their big September meeting. We're likely to see interest rates being slashed. We already saw mortgage interest rates dropping to their lowest level in years, which is actually pretty stunning. But we are going to see the American interest rates declining and being slashed in the next couple of weeks. But I think it's important to note what's going on here. This is a rock and a hard place for the Federal Reserve that massively screwed up a number of years ago, keeping interest rates artificially low and getting us in this situation where we are now. It was all funny money. This is what happens when you print trillions of dollars and try to flood the economy with trillions of dollars, right? People were flush with all kinds of money. Massive amounts of savings due to stimulus checks. It was all fake money. The United States government, $35 trillion in debt. So it was all going to come home to roost at some point, and that's what we're seeing in terms of higher inflation. And American credit card debt is at an all-time high, and prices across the board are up over 20%. Everything from gas, food, groceries, etc. So now what's going to happen to the U.S. dollar's buying power in the next couple of months? Well, guess what? You're seeing a massive move now to gold and precious metals and into real estate. Why is that happening? Why are people suddenly moving towards tangible assets again? Well, because the U.S. dollar is becoming intangible and it's becoming less attractive. You're seeing, of course, massive amounts of ditching of the U.S. dollar in favor of tangible assets or currencies that are backed by gold, or at least a portion of their currency backed by gold, like the BRICS currencies. So, what's being discussed right now? You're likely to hear from the Fed, if you get any dispatches out of Jackson Hole, Wyoming at their meeting right now, it's that they're going to talk about how we are not in a recession. They want to double down and say we are not in a recession. So you're going to hear some of that language coming this week. They certainly don't want to spook people ahead of, certainly for Kamala Harris. They want to make sure that that Democrats are going to go out and vote for Kamala Harris. So they're not going to tell you we're in a recession. You won't hear those words. And by the way, the Biden administration revised what it means to be in a recession. They even changed the Wikipedia page. You can't even go to the Wikipedia page and actually fix it and look at it. It's locked now. Isn't that crazy? Like, that's the power of the deep state in the United States, changing the definition of what it means to have a recession. I just love that. Ask any American, are we in a recession right now? You're going to get the correct answer on that. And economists historically knew how to measure a recession, and we are in it right now, folks. The question is, are we in a depression? That's the real question. So you're going to hear recession talk. They're going to tell us we're not in one, okay? They're also going to hear about, yes, reaffirming their position on interest rates and cutting interest rates heading into the fall as they try to keep and battle this inflationary period right now. They're going to say that inflation is cooling. Cooling compared to what? Cooling compared to where it was up and higher last year or in the same quarter last year? Great. But we're still high. That means prices across the board are still up 20%. So they're going to tell you what you're feeling is not correct. They're going to tell you that how your family is operating right now, you're just imagining it. That's literally what we're hearing out of the White House, by the way. We've heard that from White House spokespersons over the past week or so, that no, it's your feeling is wrong, okay? You're lying to yourself. Your prices aren't actually up. You're lying to yourself. I mean, it's hilarious, the mind games that they're trying to play right now. Just going to the freaking grocery store. It's unbelievable how much prices are up. Natalie and I went the other day to went to our local Kroger. Got like 3 bags of groceries. 3, like our own bags. They don't even sell bags anymore. Like $300. It was ridiculous. Now, granted, she did buy a gift card for our pet sitter, which was like a $50 gift card because our dog did he ran out of the house. Anyway, long story short, caused her some heartache. So she wanted to give her like a gift card to say thank you and sorry. Okay, then $250 for groceries, right? But still absurd. I mean, absolutely absurd. And the past few years, it's massively increased. So they're going to tell you that what you're feeling and seeing is not true. So that's what we'll see from the Fed. And as it relates to the U.S. dollar, the U.S. dollar dominance continues to decline. the US dollar being used as the reserve currency of the world continues to decline. So we'll see more of that. We'll get back to the video in a second, but look, your money is not safe. You can see all the time that stocks can crash, bonds lose value. Anything that you can't physically put your hands on increases your risk right now. Hey everyone, I'm Clayton Morris, longtime real estate investor and founder of Morris Invest. And my favorite tangible asset is real estate. It consistently outperforms other asset classes. And I believe it's the #1 way to build and protect your wealth. Now, while there are several ways you can invest in real estate, most of which I've tried myself, the build to rent model offers the most benefits. More specifically, single family buy and hold rentals. Here's why. Much lower risk than trying to flip a house. You have more control and higher returns than REITs. If you're investing in the stock market, it's way less work than wholesaling properties if you're into wholesaling. Many fewer repairs and headaches than trying to rehab a property. My company, Morris Invest, along with the help from our partner at Sedera Wealth, helps you invest in build-to-rent properties as easily as investing in stocks. That's because we buy and build in bulk, and then we pass on our savings to you. And when you purchase a property through us, you get discounted pricing on properties at or below market value. Seller incentives like mortgage buy-down rates and credits right now usually lowers your rate by about 1%. And we know with higher interest rates right now, you definitely want that, right? And you get free ongoing customer service for the life of your investment. Get personal phone numbers and email addresses of our team. And build-to-rent properties are in prime growth markets. We're talking 18% internal rate of return. 18%. Amazing tax benefits. And you get a free cost segregation report, helping find strategies that increase tax write-offs. You get principal reduction as your tenant pays down your mortgage. And you get steadily growing appreciation and equity gains. Plus, positive cash flow. We won't sell you a property if the math doesn't add up. If you want to know more, just click the link in the description box and it'll take you to our website where you can book a free call with our team. There's zero pressure, no obligation. Look, I understand we won't be a good fit for everybody, and that's totally okay. Some of you might want to be DIY, you want to do it yourself. That's great. Either way, you're going to walk away from our phone call with some valuable new insights and an idea of what questions you might want to ask and some actionable steps that you can take to move forward in your financial journey. You can always find an excuse to not invest, but the sooner that you start a smart investment like build-to-rent real estate in a strong market, the sooner you'll be enjoying pure cash flow. So click the link below and I hope to see you on our schedule. Anyway, today is our Q&A episode. I'd love to hear from you guys. You can always go to our website at morrisinvest.com and click on there's a little microphone on the right side of your screen. Click on that and leave us a 30-second voicemail question. We'll play it here on the show. So let's take our first one today from Tim.
Hey Clayton, got a phone call from Fidelity today that they haven't called me ever, but since I've been moving money out of my account, they had a bunch of questions and they wanted me to talk to their investment people. So I just thought that was a funny little thing, kind of out of the blue, get a phone call when moving money out into a directed IRA so I could kind of take control of my own financial future. And there he was talking about all these experts they have and planning and everything. So just thought it was an interesting thing, not necessarily a question for you, but just kind of hey, this is kind of a strange thing. They call you out of the blue when you move money out.
Well, thank you so much for that, Tim. I appreciate that. That wasn't even a question, but it's just so funny. Thank you for sharing your story. So he was a customer of Fidelity, as was I. I was a Fidelity customer when I had my 401k years ago, and I tried to move my 401k away from them into a self-directed account, and while I was still employed. So I called them, and they said, no, you can't do that while you're still employed with that company, And I asked them at the time, I said, hey, I would love to invest in real estate. I'd love to self-direct my account. Is there a way that I can self-direct my 401k plan? And they said, yeah, sure. You can invest in real estate. And I said, oh, really? Because I have a house I've identified. I know the address. I'm about to purchase it. I'd like to use my 401k funds in order to do that. And they said, oh, you can't do that. You can't do that. But you can invest in real estate REITs. Who wants to invest in real estate stocks? Are you crazy? REITs. As friend of the show Tom Wheelwright likes to say, no, don't invest in REITs. Then you're like 3 steps removed from the actual asset itself. And you don't get the tax benefits of that either by owning REITs. So no, I don't want to, Mr. Fidelity man, I don't want to invest in REITs. Are you crazy? I want to invest in real estate using my retirement funds. And you can do that with a self-direction account. So I love that. So it's so funny they got scared, Tim. It's like, they're scared you're moving money out of Fidelity and into your own self-directed account that you can buy real estate. That's very, very funny. And I should also say that, think about it, right? They spend billions of dollars in television advertising, Fidelity does. You can see it during Super Bowl games. You can see it during, regular NFL games. It's all, your path to retirement with Fidelity. Why do they have to spend so much money? Why? Self-directed custodians don't have to spend any money. There's like no advertising. And that's the brilliance, right? It's like the things that are good for you shouldn't require advertising. Think about it, right? Do you ever see like advertisements for, for protein? Like we know the benefits of eating protein, right? And eating like, organic meat and stuff like that. Do you ever see commercials on television for that? No, never. What do you see commercials for? Cheetos, stuff that's bad for you. It's the same with Fidelity, right? It's the same with these like retirement companies that are making millions off of you in fees and all these hidden things. So I just find that fascinating. I really enjoy that. Thank you, Tim, for that one. All right, here's our next question from Peter.
Good morning, Clayton. Clayton, this is Peter Carledge. I have a real quick question in that. First of all, love your show. Okay. We own our house outright, and I want to sell it, but I don't want to sell it for cash. I want to sell it for crypto. How do I do that? Thanks very much. Bye.
Well, great question here. So you don't want to sell it for cash. You want to sell it for crypto. And look, there are many states that will allow you to do that. I think Florida is one of them now. A couple of other states are allowing you to do that. I would frankly just talk to your title company about that. I mean, I'm not a lawyer and I'm not a financial advisor, but there are ways that you can settle transactions now in cryptocurrency. And it might not necessarily be in Bitcoin. It might be in USDT, sort of a stable coin, which is basically a 1-for-1 of a US dollar transaction. But, to me, that's really fascinating, though. You really want to talk to your tax advisor about the tax implications here, because you're going to be accepting funds. You absolutely can buy real estate right now using cryptocurrency. Okay, across the country, you're able to do that. You have to talk to different title companies and how you settle this transaction. And every state is going to be different. So it depends on where you are with this, Peter. But I would definitely talk to your state. I would definitely talk to your title company about how you can do this. And how you can have that settled in that way. So basically, you're going to be asking the buyer to purchase, a certain amount of crypto in order to settle that transaction. Again, what I love about the blockchain is that all of this now, having a title of the property and all of that on blockchain, makes it far more secure, trackable, far more secure. We know the history of that title and so forth. So I know it's exciting. I don't know all the ins and outs of it. I've never done it, to be honest. So I can't answer you specifically on how to do it. Just know that your title company, or find the right title company. I mean, do a simple search in your state for how, to settle this transaction using a particular title company that handles crypto transactions. And you may be able to use a title company that's not in that state that can handle it. So again, just an absolute brilliant way to do it. Just make sure you have the tax implications down so that you're transferring. You're going to be transferring from USD into USDT or into Bitcoin. Make sure you're all up and covered on the tax implications of this transaction and whatever capital gains taxes and all of that. Okay, just make sure you've crossed all of your T's and dotted your I's as it relates to that. This is a new frontier. Certainly a new frontier for me. It's not something I've done. I own a lot of crypto, but I've never bought a house with crypto. So exciting stuff. Thank you, Peter. I wish I had more answers on that one, but talk to those experts at the title company on how, and talk to your tax experts on what this does for your tax implications. All right, our next question comes to us from Dustin. Dustin, let's take it away.
Hi, Clayton. I live in southern Utah. My mortgage is currently $500,000 with a 5% interest rate. I make about $200,000 to $250,000 a year. I want to invest in local real estate to give my kids the ability to afford to live close to me if they want to in the future. So my question is, should I attack my mortgage, save for the hefty down payment I'll need for the local properties to cash flow, put money into the self-directed IRA, and then invest in the real estate, or do a mixture of the following?
Okay. Well, again, I'm not a tax advisor. I'm not a financial advisor, so I can't tell you exactly how to position your money, but you've identified something very important here, which is your why. Okay. The reason you want to invest in Utah and southern Utah is because you doing it for the future where you want your kids to be able to live affordably in a particular house at some point. So right now you're going to use it, it sounds like, as an investment property. So the key thing here is to make sure that the investment property you're buying in southern Utah is not for a future benefit, right? Because your kids might not want to live in Utah. I mean, I'm just going to be honest with you. You might want that, but they might not want that. So make sure that you're making this investment for you and that it works now financially, meaning that the internal rate of return hits those numbers that bring in cash flow from, you're making the tax benefits, all of that from an internal rate of return. Like I say, the properties that we do at Morris Invest, our minimum is about an 18% internal rate of return. That's unbelievable, right? Okay, so is yours going to be 18%? I hope. Is it going to be 20? Like I said, a minimum. So ours go higher than that. Are you going to be at 10%? Are you at 8%? And so my question is, you're doing it for like 10 years. You're doing it because in 10 years or 15 years or whatever the time, I don't know how old your kids are. Maybe it's 20 years. I don't know. That they'd be moving into this house or moving into one of these houses, right? That's the idea, if I understand you correctly. So are the numbers upside down right now? Are you in the negative because of taxes and because it's just too costly and then the cash flow from the rent is not there? And so that's not actually a good investment at all. Just some things to think about here. You may benefit from investing out of state, in a smarter market that makes sense financially, where you're building up those reserves and cash flow. You building up now the appreciation of that asset, and the internal rate of return numbers actually make sense. Then you can be using that cash flow to help your children in the future afford a property that's nearby or wherever that makes sense for them. Again, maybe it's in Utah, maybe it's not. But I think you're locking yourself into this southern Utah idea, and because of a future promise. I always want to be careful when people, not you, but when people want to make an invest or they invest for future potential, right? They'll say to me, oh, the cash flow's not there right now. I'm kind of underwater in this property. I'm hanging on to it, but in 5 years, it'll start making money. No. No, like you should be investing in something that's now producing cash flow, is now a tax shelter, is now appreciating, is now benefiting your family by building equity up, and you're building this asset up. Because my point is, you could find a property, like Texas or wherever that has great numbers on it, and you build up this incredible asset. The tenant is paying down the mortgage, so you're building up equity. All of those things, you're bringing in cash flow. Your child is, this isn't. I'm saying this property's in Texas. Your child is over here growing 5 years, 6 years, 7 years. This asset is growing. And now that child wants to maybe live in Utah. Great. Well, now you've got this asset that you built all of this equity up in over here in Texas. You can sell it, right? You could borrow against it. You could take out a home equity line of credit and use that to then leverage and purchase the Utah property. All I'm saying is, I'm hoping I'm giving you a few ideas on this. You could absolutely do that, but just please make sure the numbers make sense. Make sure it's an investment that hits an internal rate of return, is in a great area, it's in a great school district. After all, your child is going to live there eventually. So you want it to be in an A-class school district, right? You want it to have all of the hallmarks of a great neighborhood with jobs and appreciation and the benefits of low crime and all of those things, right? I'm just saying it's very difficult to invest in your own backyard. It's very, very difficult. I've been saying it for years here on the show. Don't invest in your own backyard unless the numbers make sense. You know, you might live in West Texas, in Lubbock, where we build our homes for our clients, or in Odessa, or certain parts of Missouri, or certain parts of Florida or Tennessee, or something like that. So I'm just saying, be careful. I'm looking out for you. I just want you to really think through all of these things. Okay. It sounds like you're thinking in the right direction. I just want you to be aware that you're not investing out of emotion for some future potential when the numbers don't make sense. And then you try to massage the numbers because you feel like you want to invest in Southern Utah. Okay. Anyway, food for thought. Great question though. And I don't want to discourage you. I just want you to be thinking about this with your family. Okay. And have these discussions with your spouse as well. Guys, great questions today. A lot of thought-provoking ideas to consider here. Crypto and fidelity and buying in your own backyard. So some great questions. Go to my website, morrisinvest.com, and then click on the microphone icon right there. And you can, leave us a voicemail question. Or if you want to work with our team, we build new construction rental properties for our investors who want to buy them. Full service team will take great care of you in the best rental markets in the country with great cash flow, great internal rate of return, and the bells and whistles of appreciation, the best school districts, low crime, great job market. We do it all. That's why we do it. And we do it in these particular neighborhoods. So book a call with our team while you're there. And we'll see you next time, everyone.